Boom, baby, we're live. Welcome to Tokyo Crypto Show, Season 2, Episode 158. The markets were wiped out. Why did it happen? And the name of why it happened is a company called WINTERMUTE. This is a market maker. We're going to be talking about that and a little bit more. The panel is still optimistic for the future. We will show you some lines in the sand that we have drawn. If these prices are broken below, then there's a probability the bull market is over. This market has been very unique, to say the least. I think people who played their cards in 23 cashed out well in 24. Some people are still up. Memes took a brutal beating. A lot of things took a brutal beating, and I'll have that graphic here to show you guys in a second. Panel, guys, how's everybody doing? Thank you so much for being here today.
Fabulous.
Yes.
Things still looking good.
All good so far.
Just.
Yeah. So before we're gonna pass it off to Alex real quick. If you took a break from crypto, this is why you probably shouldn't. This is what we're looking at right now. So the memes you could see, WIF is down 84%. It's actually down way more now. There's been some WIF scandal news as well, connected to Ansem, who has pretty much outed himself as a bad character and shill this market. Everybody, the poly market odds for him going to jail are pretty high. So looking forward to that. Nothing like seeing a scammer go to jail. Bonk is down 70%. Bad. Dog is down. Shiba's down. Doge is down. Pepe is down. I mean, the whole market is just in shambles. Ethereum is only down 4%, but that's because it's been suffering the whole bull market. You guys, I tell you, you guys that are just talking about you gotta hold out for Ethereum and believe in Ethereum, man, you guys,
yeah,
your dedication, your delusion, I guess I would have to say, is admirable. But yeah, bro, we're like, it's not making a comeback. There is no Ethereum comeback here.
Another week, another lower low. Yeah, that's what I'm talking about.
Brutal, man. Brutal. Real quick, talk about that. Like, talk about what's happening in the market and the brutal state of things. Like I said, this is Ethereum. This is from the high here. We'll just. I think technically the highest here. So from December 9th, 2021, it has just been brutal. Is this when they went to proof of stake right here?
Yeah. They switched.
Sorry.
Oh, no, don't worry. I don't remember the date correctly because I know they did it in steps. Like they launched the Beacon chain in that market on like December 2020, but the actual switch to proof of stake.
September 15, 2022.
It's always the date on the chart when it starts dropping.
Yeah, right here. It's just brutal. You know, everybody that was close to me and that I cared about in my life that was holding Ethereum, I shouted at them and screamed at them in 23, like, this is going nowhere. I saw the writing on the wall. And then after the ETF was a complete bust in the summer of 24, I just knew, like, we were just mega cooked. I think this is when it was approved. Like, it was cooking out bad right here, and then the ETF gave it a little bit of life, and then just, you know, the theme of Ethereum really is just cooked.
Ethereum has some unique technology to it, you know. If you look at the chart,
say that again. What'd you say, Adam?
Ethereum has a specific technology unique to it, where if you look at the Ethereum chart, every time you see a peak, you can be sure that the Ethereum Foundation sold just at the top.
Yeah.
Like every single time I'm pretty sure they create it because of the amount of Ethereum that they hold, but yeah. They have created basically every top for Ethereum in the, like, every cycle.
I
mean, at this point, the amount of money that they've gotten out if they believed in the project or whatever, they wouldn't need to sell it anymore.
Yeah, it's just the same thing like with Phantom rebranding as Sonic. Like if things are good, you don't rebrand. Like look at the solid brands around the world. Has Coca-Cola ever gone under a rebrand? No, right? I think Pepsi did like a very, very small one in the 80s. But like
I think it was when only they removed the cola from the name because it was Pepsi Cola before.
yeah. And I could understand that because they're number 2, right? You know who's done a bunch of rebrands? Well, first his name was Puff Daddy. His name is P Diddy. Now he's Diddy. Now he's the Diddler. You know, rebrands are not good. Yeah. And Bob Loukas said something recently. I don't know if you caught that, Alex, because I know you're living all your life. But did you see what he was saying about how this cycle is? There's basically no more new money. I don't know. Could you interpret what this means? Take a look here real quick. If you guys are following Bob Loukas, he's been a friend of the channel. I troll him for taking the vaccine often. He replies to me sometimes. He's a good guy. It says, this is the eat each other crypto cycle. The fresh meat ain't coming. So how do you interpret that, Alex?
From his opinion, he's like, Bitcoin is the narrative and everything else is just kind of noise. And so we're seeing that even with like, Ethereum major layer 1, and it's just, it's got really good technology. It can do a lot of shit, but just no one cares. And like Solana, like it can do lots of stuff. People like it because it does lots of transactions, but that's so people can just gamble, to be perfectly honest. So, and all of those like meme coins are all like PvP and everything. I mean, we had the Trump coin, which like sucked up all the meme liquidity, and then the Melania coin, which I have no idea why people were buying that. You just like a really quick look and you see that Melania's got like 60% of the supply, and she's just dumping whoever runs it, they're just consistently dumping, and they're earning hundreds of millions of dollars. Holy shit. And so now we've got sort of the traditional finance coming in, and they're just buying, Bitcoin on the ETFs. Like that is the main thing. Bitcoin's going to get pretty much all the money. And a few different people I've heard them say like it's a winner takes most.
Yeah.
And like Bitcoin has been the prevailing scenario, the prevailing narrative in every single 4-year cycle. We've had like GameFi, and we've had all of the DeFi, and we've had like all of these other narratives come, but they all sort of go. And whereas Bitcoin's the only thing that's hanging out. And now we're into the final year of the 4-year cycle. And, we're sort of just coming out of the whole like shit show that was all the memes like peaking at the end of last year in November, which was a lot of fun, but whoa, my God, that was crazy. And so now he's looking forward to the end of this year. He still thinks that we're on for sort of a Q4 top, and that most of all the coins are just really not going to do anything. There's not really any extra, like people are not going to be transacting on chain much more. All of the new people will probably come in mostly by the ETFs. And so we're just going to have people throwing their super funds at it, throwing their, hedge funds will get in on it, But the only avenues they'll have really is Bitcoin. So like that's kind of where we know excitement will happen. But in terms of all the other spaces, it's like, who knows? I saw a really good picture where it was just like, crypto 2021. And then there's just like a little graphic of a whole bunch of cups. There's like 4 or 5, 6 cups and a guy with a jug to fill them up. And then and then there's there's this year, and then there's just like this endless, but the guy's still got one jug. Like you can't fill up all the fucking cups.
Yeah, James puts that in chat. James is not with us today, guys. I think he works overnight, so he might be sleeping or taking a rest. But yeah, like another thing I want to kind of clear up is there's not like this is exactly what Alex is talking about right here. There's not going to be a widespread alt season. Like those days are over. If you hear anybody saying alt season's coming, that is a sign of a dumb person who doesn't know what they're talking about. And don't be alarmed. There's so many dumb people in crypto who have no idea what they're talking about. But in 2021, when you have about 16 to 1800 coins, and you have at the top, you know, like a 3.9 trillion market cap, give or take. The money doesn't have much place to go. But now with pump.fun producing 56,000 meme coins a day, the delusion is real. You know, I ran the numbers too, assuming each of these projects got like something like a 50K market cap, you know, that's like based upon the year, that's like $900 billion of liquidity just rugged, you know? So yeah, there's a lot here. So but like I said, despite that, I personally, so behind the scenes, I'll just say that I have been relatively bullish. I am thinking maybe the bull market is over. Now, that's just my personal perspective. So when people like Eddie C Fox say is it over, I personally think there is a probability that it's over. You know, everybody's talking about this February narrative. We're supposed to have a great February, but last year, the reason we had a good February is because the ETFs were dumping billions and billions and billions of dollars onto a $40,000 Bitcoin. So there's that. I'm just seeing a lot of capitulation. I've seen a lot of people freak out, lose their mind, lose money. But the panel, all three of these gentlemen are actually of the opposite mind, and that's why it's good to have an educated team. I want to be wrong. I don't want to be right. I desperately want to be wrong. I want these guys to rub it in my face when I'm wrong, or when I'm wrong in this situation here. So we're going to talk about that with the panel. Alex has been working night and day, guys, behind the scenes with his charting and just a phenomenal contribution to this team. And I mean, all these guys, I talk to like Elias and Adham. I talk, you know, multiple times a week. Alex as well. We don't just meet up and chat. Like we have been, just so you guys know at home, we have been in a group chat and working on this since December 2023. And I could collectively say that all four of us, excuse me, are like living and breathing crypto for the most part. So Alex, you have a lot of information you'd like to say. Whenever you're ready, just like let's do Bitcoin in Solana, and then if you feel like, you know, beating up a retard, pull up Ethereum.
There we go.
It's gonna turn around, man. I promise, right?
That's it. Everyone's, this is the low. You know, alt season will kick off just as soon as, you know, Bitcoin dominance comes down, Ethereum starts kicking off. Now, look, weekly chart, and here we are with a nice kind of like peg in the ground here. So in terms of like what a candle looks like, that's quite a good contender for a low. However, that might just be a temporary low before we continue lower. So who knows? After we lost this sort of major bit here, it's just been like absolutely in the shitter. So anyways, we will not tread over places we've been before. Even with this big drop, pretty much we're still the same as last week, whereby the bull market is still on until price breaks down low enough to indicate that it's all over. So we're still clear of this $89,000 level that I'm personally looking at. I've said many times that I'm going to be a lot more cautious below here. If we were to get a close below this number, about $89,000, then I'm sitting there going, ooh, are we going to have a multi-month down, down, down? And if so, is the whole year going to be down? And if so, is the bull market over? However, above this level, I can only just assume the bull market is still on. We were expecting sideways chop till the end of February. So I'm just sitting here waiting for the sideways chop to finish off. We've got a higher low, even amongst all the craziness, you know, going from like what 102 down to $90,000. Now, typically in all the other cycles, crypto, you know, a 10% a move a day, swinging in either direction was sort of normal. For traditional markets, that's like an absolute heart attack. That's crazy. Now, as we move through the cycles, we were expecting, you know, crypto, or especially Bitcoin, as it got to a larger market cap, more liquidity, etc., that those price swings would be a lot less violent. However, we still get those like sort of, instead of getting a 25% decline, we're getting a 17 or 18% decline. So it's kind of still pretty volatile. And so having like a one weekly candle be 10 or 11% is totally, unfortunately or fortunately, that's totally within the realm of possibility. We've had, on the way up, multiple 15, 16, 20% candles. So in terms of all the volatility last week, it was crazy. But and everyone felt like they were getting whiplashed in various directions. We might be able to pull up the Fear and Greed Index in a little bit. But basically, that thing has been flying from friggin' like 80 to 50 to 70 to 43 to 80. And it's just every day. It's just fucking like the market is just BPD as fuck. It's just like completely gear switching with no chill.
I'll really quickly share it so you guys can see. Yeah, see. So we're at 49 right now, right? So
49 is good. We want to see, like, when we get the low price, we want to see low on the Fear and Greed, because that means, cool, sentiment's down, price is down, we can bottom out. If sentiment is still high, if it's still in the 60s, yet prices are low, that means we've still got more down to go. So I was quite happy to see we were at 43 the other day. It does change during the day, and when it puts itself on this graph, they do sort of adjust the numbers. So it depends sort of what time of day you look at it, but we want to see it trending down in order for a low to be in, because people have to be like, things can't get any worse in order for the low to actually happen. So if people are still positive, then that's kind of not good. So we want to see everyone be sad here, because that means everyone thinks that this is a low price. So in terms of Bitcoin, we're still above the $89,000 level. We've put a higher price in here. We're holding, this magic line here. So this level is still, we're sort of forming this kind of range. So when you're in a range, you kind of generally drift between like the top sort of like 25%, 25%, and you kind of spend most of your time in here. But you will visit these areas a couple of times, over the course of the range. So we've got this all-time high up here. Lovely. Now, here was the all-time high close on the week. So that is kind of the price to close above. Obviously, we want to see that cleared, in March. But, we'll take it level by level. At the moment, though, even amongst all the craziness, it didn't break down low enough for a cause for concern, and especially it did not close low. Like if we go down and we close the week down here, then that's very bad. But in absence of that, I can only assume that we're just going to continue chopping sideways. This is just noise, so you just got to chill. You just got to chill. If you've been following the show for more than 3 months, then your position should be all the way down here and lower. You should have like an average cost basis in the 60s and below. So you should still be sitting pretty good. So now's not the time to freak out. If you've got meme coins and things like this, probably time to be a bit defensive on those, because they, especially here, like, Bitcoin does 10% drop, but they get melted. Like John showed the chart before, they get melted by 80%, 90% drops. Is crazy. So that's why also small percentage of your portfolio, a couple of percent perhaps. Solana, similar story. We, came up looking good and flew down, but we have not broken this range here, this $169 level. So I'd probably put a line in the sand at 169. A close below there, that probably means we want to keep going lower. And by keep going lower, I mean for like, months, not just like, a week or two. So we really want to see this just kind of dick around to the end of Feb so that it can do something. However, big panic from people, but we did not go lower. So price says, I might like below here and a close, price is going, I'm going down. But in absence of that, we can only assume price is still going up. So last week, literally the same message. We're just sitting here. We're just enjoying the run. Bull market's still going. Nothing is said that it's over. So we must just sit tight. Now, there was like a chat about, and I know we keep harping on about Bitcoin and such, but you'll see like Eric Trump, he posted a tweet and he's like, buy Ethereum. You'll thank me later. Like, just don't. These people are full of shit. Trump and all of the people in his circle are all loaded up on crypto, and they are in politics for many reasons, but one of the main ones is they like money and power. Money. So they are going to do whatever the fuck they want to do to make a fucking killing. We've just been seeing all sorts of stuff with like the Democratic Party just literally blatantly laundering money in Ukraine and all these sorts of, like, they don't give a fuck. So of course, I believe crypto will go well, because if it goes well, they're going to make like more money than they've ever made in their entire fucking lives. I wouldn't be surprised if the Trump meme coin makes more money for Donald Trump than all of his business ventures ever. Like, it's just ridiculous how they can make so much money in such a short period of time. So they are going to do that, and they're going to fuck over everyone. They're going to get everyone's retirement funds, and they're going to do all this shit, and they're going to shove it into Bitcoin, and they're going to fucking rug the floor out of it. So we don't want to be there for that. We want to be fucking off when that time period comes up. And at this stage, it is still looking like Q4, or at the very least, not until after we get a pump from March. So we just got to sit. We just got to sit tight and enjoy the ride. Unless it gets lower than those prices, $89,000 Bitcoin, $168 Solana, just don't even worry about it, man. Don't even worry about it. Someone tries to come at you with like, oh, but this, but just chill. Like, what's your trading plan? That's my trading plan. So it's kind of like, I'm just that guy at the press conference who just like gives nothing. Like, oh, yeah, but it's not at the price. So, no comment.
Yeah, it's there's a lot to be digesting here. Elias, you said you have some good news too, because you were talking about what's going on with Bitcoin. Do you see the hash rate right now is the all-time high?
Yeah, basically. So I'll just screen share real quick, and we can look at the mining stuff. More or less, miners are not phased by the current drop.
Mm-hmm.
Can you see this well?
Yep, there you go.
Yep. Oh, okay, perfect. So basically, this is mempool.space. Here you can see the average transaction cost for a Bitcoin transaction. So no Lightning, no nothing, just raw Bitcoin. And what is funny or interesting is that there's only like barely 5 blocks filled up right now. So waiting to get their transaction through. This is laughably low. And it currently costs you about 20 to 40 cents to send a Bitcoin transaction that gets sent through within 10 minutes. So this is extremely low, not a lot going on the blockchain. Miners do have less revenue because of that, because they earn less fees. But in general, if we look at the hash rate, we had a difficulty adjustment to the down by 2% last time, which means that miners are earning a bit more from the actual block fees, from the block rewards, sorry. And if we look at the hash rate chart, and remove the difficulty here, we are more or less at an all-time high for the actual hash rate. So lots of new machines coming online, probably old ones getting replaced. This means miners are investing money into their farms and infrastructure. For the difficulty, we went down from the all-time high, which is also good, which means more money to invest for the miners. And the current average production price global for mining is at about 84K. So they're making something like 15% profits. Something else that I found interesting was a chart of Bitcoin against gold, and we can switch to the linear version here, to the non-logarithmic one. And why is this interesting? Basically because gold more or less is not that faced by inflation. So we can see this a bit like inflation adjusted Bitcoin price chart, but based on gold. It's a bit different because gold is also going up and down outside of inflation. But if you go back in history, you can go back to Roman times and normalized for production costs because of the industrialization and everything. Gold has pretty much been stable for thousands of years in regards of what can you buy with it, like foodstuffs and everything. And what is interesting here is that if we look at the monthly chart of Bitcoin priced in gold, we just went above the old all-time high of 2021 and went back below it. So what I want to see here is close above it before we can resume the pump of the bull market. And this is just something interesting. I wouldn't put too much weight onto this chart, but if you want to look at it, and it also nicely shows the huge or the gigantic impact of fiat inflation on how we see prices. If you look at charts and if you look at the markets, so if we look at gold in US dollars, we actually had something like 38% loss of buying power in the US dollar over the last 2 years, which is much. Yep.
Shit.
So this is just, for me, this is an argument for Bitcoin, because Bitcoin has a lot of volatility, but it has actually been pretty stable. So this is a chart I like to look at for this. And if we go to the old cycles chart we used, so I created a new one that is a bit more clearer and more clean. But in the old one, what I wanted to show is just the RSI, the stochastic RSI down here. And if we look at it, actually for all the tops we had, it went well over 85. So this is basically the RSI level I like to use for myself to say, okay, it's getting too hot, or I have to slowly start DCAing out of the market and taking profits and de-risking positions. And so far it worked in every cycle top for Bitcoin. And I'm pretty sure it will work really well again. With those indicators, it's always not a bad idea to react a bit earlier than you would have if you would have known the data from the previous bull cycle before. And this is because of the diminishing returns. So what I want to say with that is, if we went to 95 in 2017, and then we went up to an RSI of 91 or 92 in 2021. So I'd probably like to get out actually, or start getting out at 85 this time, just because Bitcoin has diminishing returns the bigger it gets, at least so far. It has shown that it does. And on the RSI, I still don't see any big warning signs. And if we check, we are at about 70, 72 right now after the short dump. And if we go back a bit and check the 2016 chart, that's when we have been at below 1K for Bitcoin. And it went up to to basically 16K at the top in the cycle. And if we check, where have we been at 70 in the 2021 bull run. And that's when we have been in the 20 or 15 to 20K range. And then we went up to 60K. So I don't want to say it's sure that we will 2x or something like that. But we're at 70 now. The market isn't that overbought. And this is just one argument for me to say bull market is still intact, at least for Bitcoin, 100%. And the next point would be the new chart. And this is basically just a simplified version of the old cycles chart we did, which has on the timeline below, it has the first halving, the second Bitcoin halving, the third halving in orange. And then it has the cycle low and the cycle highs in green and red. And this time I combined the time frames from the low to the halving, and from the halving to the high into one time frame, and then the bearish time frame would basically just be from the high to the low. And this is something that a lot of people have switched to just because it's easier. And one really interesting thing we can see here is that the old data, we can ignore it basically, but starting from 2015, both cycles, or at least both timeframes from the low to the next all-time high, have been 1,065 days or 1,064 days, around that. And
Shut up! Take my money.
And both beer trends, basically from the high to the low, have been exactly 1 year. So it's been 365 days from the high in 2017 to the low in 2018. It has been 365 days from the second high. So from the double top, from the all-time high in 2021 to the low in 2022. And that's basically what is used here. So nothing special, just counting the days. And based on that, I think the next high, or if we see this repeat, the next high would be in October 2025. And from there, we would dump till October 2026. And we can also see this if we go from the high to the low. It was December 17 to December 18, so exactly 1 year. Next one, November 21 till November 22, exactly 1 year. That's why I'm expecting or calculating with this 1 year drawdown. And then the next point, or to summarize this, basically, we still have a few months left till October. And based alone on the timing, I don't think that the bull run is over yet, at least for Bitcoin. Then the next indicator, basically, that was pointed out by Crypto Lead or Luis on Twitter, who is also on the show the last time and a few other times. He basically retweeted something where people are using 200-day moving average to predict where the next top will be on a timing basis. And how it works is basically that we take the last all-time high. So here, this is the blue line, and paint a horizontal line from the last all-time high to the right. And then we take the 200 moving average and see where they cross. And this is our signal, our timing signal, not a price signal, just a point in time where it's highly likely that we'll soon have an all-time high. And as you can see here, it doesn't cross exactly at the all-time high. This is because I've changed it a bit to, again, be more aggressive, more of a canary in the coal mine, that it triggers earlier this time because I'm expecting diminishing returns from Bitcoin. And so this worked in 2017 to detect the high of the cycle. And it worked in 2021 to detect the second high or the double top of the cycle. So it's also good if we give it any credit to detect if it's a double top, if it's only the first top, or if we should actually take it seriously. And right now, if we do the same, so it's always the same horizontal line from the last all-time high to the right, and then see where it crosses the moving average. And if we do the same from the last all-time high in 2021 at 69K, and see what the moving average is doing right now, this would also point at around October 2025. So of course, there's a lagging indicator, so it could change if we see extreme price movements, but it's pointing exactly at this direction. So this is just another indicator for me to say October 2025 seems reasonable to me as an all-time high. And if you want to use this too, you could either take the 200 moving average, the 200 week moving average, I said days before, or you could take the exponential moving average just to have it react a bit faster, be less lagging. and use the 225-week exponential moving average. You will find this in indicators if you search for EMA. And this will just give you the advantage of triggering faster if prices go up, so that you don't get the alert too late, basically. Because if you get an alert for a top too late at an all-time high, it could be that we've already dropped 30% or something. So for me personally, and for planning with the business, as soon as this moving average here, this blue one, hits this blue circle, which has a radius of about 20% drawdown from the price of the last all-time high. As soon as it hits the circle, I'll also start DCAing out. And the last indicator I'd use and I would look at right now to support the case that the bull market isn't over yet and should be over or hit all-time high around October is the pi cycle top indicator, which is also a moving average of 350 and a moving average of 100. This is also a bit tuned. The default is 350 and 111. But this one worked extremely well for detecting the tops of the last cycles. So if we go back a bit here and go to the first big bull run after the first halving, it had a small error here by detecting it too early, but it successfully detected the actual all-time high of the cycle.
That's 2017, yeah?
And it's 2013, actually.
Oh, 2013. Yeah, sorry, that's a massive God candle.
Yep. And it basically triggers a warning as soon as the two moving averages cross. That's all it does. So it's nothing special. It's just something that I don't know who saw it, but someone saw that it's working to detect Bitcoin tops. And it's basically still working or has been working for the last tops. In 2017, it's also been crossing here, successfully detected the top. And if we go to 2021, it actually detected the first top. So it's triggering even faster than the other methods. And if it needs a cross to trigger a warning to detect the top, basically this means the less space the two moving averages, which are the white lines here in the chart, have between each other, the more likely it gets that we are at the top if the indicator is right. So, and right now we aren't that far apart, but we aren't that near either. And they're also, from how they look, they could also match up around October 2025. So that's why I'm extremely sure on the timing that the bull market, at least for Bitcoin, will end somewhere between September and November 2025. I'm expecting something like the 20th of October, just because then we would have exactly the same time frames as before. And at least if one of the indicators triggers of the warning signs, or as soon as we get into October, I will start DCAing out of all positions and de-risking. And that's basically it for the timing. Apart from this, we only have the price predictions. And for the price predictions, I'm not really sure, at least not as sure as the timing. But there I only have more or less the 12-year or the now more than 12 years trend line, which is like this faint orange line here.
Yeah, zoom in on that a little bit so they can see the logarithmic trend, because this is really important, guys. This actually I was up at like, Lord, what time is like 2 a.m. in Tokyo reviewing this with Elias. This was really mind-blowing because this absolutely correlates with the price movement directly in 2024, which was honestly just crazy.
So if this basically it started a bit earlier, but data from Bitcoin at $5 isn't that interesting. Nevertheless, if we started at 2011 and put this line in here on the logarithmic charts, It only works on the logarithmic chart. And then we see that we have like a really long trend line, and we've been above it for the last cycles. And at the last low in 2022, we went below it for the first time, went above it shortly for the last halving in April 2024, and now we are more or less going above, below, and following this trend line.
That week before the halving, if you could look at that green bar week before the halving, second week before the halving of 24.
Yep, I'll switch to the weekly.
Yeah, that right there, when that big candle there, I believe that was March 13th, right? If I'm not correct.
Yep.
Or February 24th, running into
February, March. Yep.
Yeah, March 14th is when we had that first big all-time high in 2024, and that's also when we had meme coin mania, the first one pre-pump fund diluting the market, and then that was just when a lot of money was made, and then it went down below, and then it went back up. That was like around May when it spiked up again above 70K, right?
Yep, that's so we went below in June again, and in May we got support from it more or less. And this is if you put this line in there, there's a lot of ways you can put it a bit lower, you can put it a bit higher, and you'll find that it matches more or less. Because it's such a long time frame, it's really hard to find it. But if we go back, we just see from starting here that we always bounced back from it, or basically got support from it. And in 2015, we got support and we pumped. And then we had the low in March 2020. And this was the COVID Black Swan, I think. Or some Black Swan was here. And we got support at exactly this line. And we went above again. And then we got support here in June 2020. And finally broke below it. And this is just something interesting, I think. And this is also one more indicator for me to say, if we follow this line and don't break above it and pump like crazy, which I don't see extremely specific reason for, why I think we'll top out in October 2025 at around 170K Bitcoin, or 174K. And this is actually the same price I get when I do simple trend continuation on the percentages here. And yep, you can just put it in there in trading view if you want to put it into the chart. Just have to make sure you can go to the bottom right, and there you have an A and an L. The A will automatically adjust the height of your chart, and the L will switch from logarithmic to linear view. So this is the normal thing you'd use for stocks most of the time and for bonds. But for Bitcoin, because it has such high price movements, you'd want to switch on the logarithmic view. And then the long trend line will actually match the candles. And that's basically it from me.
Boom.
Yeah, wild. Jason says, should I pay attention to ratios when swapping out ETH or just get out? Dude, what have you been doing? Like, what have you been doing? We have been telling you to get out of ETH since summer of 24. You've been through multiple of my programs, dude. Like, have you just, what do you, yes, get out, bro. Get out. Your money is probably significantly lower now, though. But Lord have mercy, get out.
Yeah. If you didn't get out, like when it went really, really low, then that's great because it has recovered up a little bit. I mean, the general kind of, not so much a rule, but something that's good to keep in mind is you should try and sell on a green day and buy on a red day. So if you were looking to swap Ethereum into something else, if you can see that versus whatever you want to swap into, Ethereum has had a little bit of an edge over that one, then you'll get a better ratio. In the same vein, we are getting like a nice sort of hammer candle on the weekly with Ethereum Bitcoin. So Ethereum in its drop down, like, because where it is now is like 20% higher than what it went to. Like, it got gutted. It went down to like pretty much $2,100. It's crazy. So it's come back up now. Let's have a look with 2,400, 2,700. How are we looking at now? 2,800. Beautiful. So it's picked up from the recent low it just made. So we might be finding that you get a couple of days or so where you have a good time and a good opportunity to cycle out to something else, probably just Bitcoin, really. In the same vein, we have made a lower low, and that continues a chain of lower lows on the weekly. So if you wait too long, you might find yourself with an even more unfavorable ratio. So if it's a green day on the ratio, then that's never a bad time to swap across.
It is, yeah, it's, it's, man. Yeah, just what's happening is like just so unprecedented. I'm keeping up with everything. I mean, people are texting me. It's just like honestly, fumble of a lifetime with Vitalik. Like fumble. This guy will go down in crypto history as an idiot and ultimate fumbler. Because this is just, I mean, Adam, you're last up here. From a developer perspective, I mean, you're a blockchain developer. You're very in depth on everything. I love how out of all the people in the chat, the number one person not losing his mind is Adam. It's just like everything's fine.
Everything is fine, at least for now.
Yeah.
So I share Alex and Elias' sentiment. I don't think the market is over yet. I am open to changing my position should something else happen. So my reasoning is, I think, probably the simplest. No, so when you mentioned Bob Loukas before, and he's known mainly in crypto for introducing the idea of the 60-day cycle that is more popular in traditional finance. The gist of it is that every 60 days, Bitcoin has a bottom, and between those 60 days, it will usually have a top. So there are two types of cycles: positive cycles and negative cycles. The positive cycles, as the name implies, tend to see a general uptrend in the price, whereas negative cycles go down. Now, the negative cycles will have their top on the first half, which is why we call them the left translated cycle, because the chart usually reads from left to right, right? So the negative is left translated. The positive cycle is called right translated. And the positive cycles tend to run a bit longer than the average 60-day, while the negative cycle tends to run a bit shorter. It may be a couple of days, it may be even a week, but 6 days is just the average, not exactly how long it has to be. But I mentioned this because just like how there's a 60-day cycle, you can extrapolate that and run the cycles in 4-year timeframes, which is something that Bob Loukas does. He actually has a series where he releases a new video every like 2 or 3 months, showing his current outlook on the cycle. This is a more important cycle in the sense that it will give a bigger sense of direction for the next long-term movement. So for the next couple of months or years even. So just like the 60-day cycles can be positive or negative, the 4-year cycles can also be positive or negative. So far, the 4-year cycle for Bitcoin have all been right translated cycles. So their top has always been towards the end of the cycle, and thus it has been a really high top, which is what we call the bull market. Bob has mentioned, even though he still believes that we are in a right translated cycle like the previous ones, he has mentioned a couple of times the possibility of eventually we getting a less translated 4-year cycle. This would mean that there will come a time where instead of having the usual 2-year bear market and then 1.5-year bull market before the top, we'll probably get a cycle where we have the 2-year bear market, and then we have like maybe 6 months of positive price action, and that's when the top comes in, but it comes in before the mid point of the cycle. And then we will have the next bear market would probably be like 3 or 3.5 years, because the bull ended so early that the rest can only go down. And that is a possibility if, for example, this January was the top, and then what remains of this year is downtime. Then you would also expect 2026 and 2027 to be down price. So it will be 3 years before 2028 comes around, and then we get the next Bitcoin halving and potential bull cycle. So it's a possibility, yes. Is it likely? Currently, I would say no. So far, we know Bitcoin has drop downs and has negative cycles, 6-day cycles inside of a bull market. That is normal to happen. What would get me worried and make me think of this potentially being the top is if, for example, we get 2 negative cycles in a row, because that is not common when the bull market only lasts for an average of a year, and you have 2 60-day cycles, so 4 months out of that year in a downtrend. That's more bear market situation, right? Like that shouldn't happen in a bull market. And if that were to happen, if we were to get 2 continuous 60-day cycles that are less translated, so negative ones, that's when I would consider getting out, because at that point the picture of the market as a whole seems to be like, okay, it's all over. And that's basically why I'm still positive, because we haven't had that play out yet. It may not be as elaborate as some other reasons. Like I don't have magical lines on my chart just yet. But yeah, like if the price is generally moving up, you can stay calm. Shopping is normal, and going down to a certain degree is also normal. What you don't want is that kind of price action to be prolonged for a long period of time. If it's just the normal, like up to a month, that has happened in previous bull markets, so you can stay calm that it's just Bitcoin doing its own thing. But if it were to do it for like 3 or 4 months, then that's when you really start to consider getting out of the market, because it's painting a different picture at that point.
Jake Nyland says, I sold half of my Bitcoin at 107K, did a 2.5x, but had to hold for years through crypto winter. The rest gets sold at 165. I think top is going to happen in March and May. I think your initial strategy there of selling your Bitcoin at 107, not a bad idea. Good play for sure. I don't know what your entry point was, but kudos to you.
Something like 40,000, give or take.
Maybe, I don't know. Oh yeah, you reverse engineered. You're so smart with the math. Bingo.
I got it on the dot. Nice.
You're so smart, bro. You're so smart. I often tell these guys how smart they are behind the scenes. Great work, Jake. Great work. Kudos to you, brother. Very good work. That's great. So what was you were saying something that if we don't see some price action, Adam, by mid-March, we might be cooked.
Yeah, we like the currently the top is it was in mid-January, right? So by mid-March, it will be 60 days of nothing if we don't see any price movement. That's when my first like alert would start sounding off, like, okay, why haven't we had any sort of positive action? The current cycle, the 60-day cycle we're in, has the midway point in about 6 days, so around February 11th, give or take. If we are above 100K by then, we should expect a more upwards price movement towards March. If not, then we can expect this cycle to be a negative one. It wouldn't be the end of the world, but after it ends in like mid-March, I want to see some momentum getting built up, because if the next cycle is also starting to look negative, so like by late March, maybe early April, we are not starting to move up, then that's where I would be worried. Like, okay, if there's gonna be a second negative cycle in a row, we could start calling like the market is over. Or if not over, if you want to stay optimistic, we could say like, okay, it's gonna be dead until Q4, and then on Q4 we get a final pump out of nowhere. That could happen, but like Alex mentioned, at that point I'd rather get out and get in like late September and just try to capitalize on the pump at that point. But in the meantime, I have my money available for other stuff.
I also want. So I'm of the same opinion basically, because there's another thing in the background that would add to this and would match it, and this would be that we had, if we did the double top we did in the last cycle in the bull run, this time again, and just in case, it would be from the timing, it would be March, May.
Isn't it illogical to even consider to look at a past chart and be like, yeah, this is what's going to happen this time?
No, but it could be a possibility basically, and it could be a possibility just because people think it could happen, and based on this, it might be a cool strategy to just take some profits, or if you're on a centralized exchange, you put a stop loss in if you want in March to May, just because some people might think it will happen again, or there is some reason we don't know of. Could work out pretty well. And normally I'd also side on this being a bigger possibility. But what I'm seeing, at least in the what I'm consuming regarding news and social media and everything in my bubble, so to say, is that people are always floating the idea of there will be a 2026 all-time high, which I think is being pushed by insiders in the crypto industry to get retail exit liquidity.
Yeah.
That's it. So if the media, or at least the crypto media and people in the industry, would be floating the idea that the top will be in October 2025, I'd be more inclined to get out March to May.
Yeah.
But since they are pushing the exit liquidity to 2026, which is not something nice to do in my opinion, but that's just how it is in the industry and how it is in all markets probably, since they're pushing it to 2026, and I think the October 2025 top is much more likely. And that's just a personal opinion, but that's adds on to what Adam just said, and would match it that if we don't get positive price movement after, let's say, May into June basically, I'd also be more wary and maybe de-risking or starting to de-risk with DCAing out till October or something like that, just to not get dumped on.
Yeah, it should just go. We can go sideways, but once this, if this 60-day cycle is the end of the weekly cycle of price movement.
Your mic cut out, buddy. I think you touched something, Alex.
Are we here?
You're back, brother. There you are.
Always. Basically, weekly cycle. Okay, if this 60-day cycle is just the end part of it, and the fact we're not going lower is actually super bullish. Okay, cool. That'd be nice. Well, it should finish up by end of Feb, start of March. So from there, new cycle, price should go up. There's a saying that's like, when time is up, price catches up. So the time is up at the end of this month. So, motherfucker, better go. Like, it should go. So, you know, we'll take it as it comes, but it should fucking go. And if it doesn't, something's wrong.
Yeah, James was saying something along those lines. He was expecting it to pick up at end of February. But so when is the end of this 60-week cycle? 60 cycle. 60 cycle. Let's say February 11th.
Let's get a day.
Let's just pull up the chart. We'll do it right now. Unless chat, you want us to just end the show, we can talk to you later. Let us know.
It's like March 10th, something like that.
Yeah, you guys could go watch Charlie because he said Doge is going to $3. Why do you guys keep on sending me all these updates about Charlie's failures? I love it. It's hilarious. But yeah, Doge at $3 while Alex pulls that up. Let's just do a quick. Let's just laugh at Charlie real quick. Drugs and alcohol will ruin you. Let's see. Doge going to $3. Let's go to compare market cap real quick. And let's entertain the chat. Okay, so it has to get to $500 billion market cap. Okay, thanks real quick. Go ahead, Alex. Back to you.
Yeah, cool. So it could happen, man. It could happen.
It's still good. It's still good. $500 billion.
With Bob's count, he kicks it off from here. So 60 days back.
Zoom in just a little, just so we can get for the people at home, sir.
Zoom.
Thank you so much.
You got to get your 45-inch. I've seen those like fucking 60-inch, but it's like a wide screen. It's like the size of a monitor, but it just stretches all the way around. Come on, guys. If you're a serious trader, you need one of those.
The retard tracking system is on Charlie. Good old inverse Charlie.
Here we go. So if we go 60 days, we are looking at sort of, I'd say, 28th of Feb would be day 60. So, you got a bit of leeway.
Okay.
So back from 24th of Feb to the 4th of March, say, somewhere in there. So it's kind of like the last week of Feb or first week of March is when we're looking for that like last low, which, we would like to see either at this level or somewhere above. Like we shouldn't be all the way down here. If we get like a really quick wick and we fly the way up, like here, that's great. That's positive. But if we go down here and we close down here, then that would be a really bad sign. Because whilst it is like, oh, it's the end of the cycle, we're expecting a low. We really, we maybe we get that
below 89. You say 89. It's game over.
I'm getting a bit like, what's going on here at 89? Now that said, I don't have like some sort of huge stop loss where 100% of my portfolio just gets liquidated instantly. Because if it's the end of the market, there will be a bounce. Like that's how, if you look at like the previous tops, there's always like this huge down candle which says like something's wrong, warning, and then when we fly back up on that reaction, that's the time just to like exit because there's still liquidity because people are buying and they push it up to a lower top. So even on a lower break here, I'm not gonna just fly off the handle and just liquidate. There'll still be like, okay, now we're just looking for a period to de-risk. So yeah, 28th of Feb. Look for around that date. That's what we're keeping our eyes on.
So 29th is the end of the 6-day cycle?
Well, it depends what, because 60 days is never 60. So, or rarely 61, 57, 50, 54, 65. So a bit around there. Last week of Feb, first week of March. So we would expect to see some sort of low come in, or nothing, just sideways or a low. And that's fine. Cool. But then it's time to go. Time to move. I think if I'm mirrored, it should be this way. Time to move. So until then, unless we break lower and close below 89, I'm just sitting. Like I'm just chilling. Cool.
People keep on asking me in the chat, why is Eric Trump telling us to buy Ethereum? I don't know, but it's a very bad look. Honestly speaking, the Trump has not really done much for crypto, living up to quite shit since being president. He did the meme coin launch, which if you timed it right, you could have made money. Eric Trump is saying to buy Ethereum. Anybody with a brain is telling you to stay away from Ethereum. There's two things that you need to pay attention to. For some reason, BlackRock is continuously buying large amounts of Ethereum. And the Trumps or Eric Trump is saying Eric Trump is like, he's like becoming like the crypto Trump. Don is kind of just becoming the podcaster, but Don Jr. that is. But either they know something that's up, but you can't, like, that's what people in crypto want you to do. They want you to bet on the potential future. Like, oh, it's coming, it's coming, it's coming. But the reality is if it's coming, it would have been here. It's not. Sorry, it's gonna pop up.
I think I have a theory why they think ETH might pump.
Let's hear it.
And this is at least what they published so far from different people in the administration, and I think from different ministries even, or from the SEC, I don't remember. Is
Shut up!
that
Take my
they
money.
want to add proper regulation for stable coins, which means, or which would result in, based on what they said so far, that US banks could mint or could issue US dollar backed stable coins. So like currently the only example would be USDC, USDT, and a few smallers, but so far I think only USDC and the new Ripple one have proper licensing in the US. And if every single bank could do this, you'd suddenly have global US dollar adoption, because the US dollar is the least shitty of the big fiat currencies. And most likely the banks have some tech for this in their back pocket, or they just buy it to buy off-the-shelf software to offer this to their clients, because they have to fulfill and comply with a lot of regulations and certifications and security stuff. So it's just a good idea to take off-the-shelf stuff. And in my opinion, this would most likely be Ethereum tech. So if we get if we get legislation to allow US banks to issue US dollar backed stablecoins, I think this will mostly happen on Ethereum and not on Ripple and not on any other chain, because other chains, there's Binance, which is more or less Chinese owned or Binance owned.
You can't trust anything Chinese. Sorry.
Yep, and for you, it would also look bad. Even if they are trustworthy, I don't think the US government would do it or Trump would do it. Then you have Ripple, where you don't just send money at the address of the person you want to send it, at the wallet address. You also have to put in a tag and bullshit. It's just harder to use and harder to develop for, and it's completely centralized, which is a
Nobody
single point
cares
of
about
failure.
it.
Yep. And then you have part of this. You have the USDC stuff already, which is on different chains and working, but as far as I know, it's mainly used on the Tron blockchain, which is also an Asian chain. So no official government support from the US, and you have ETH left. Or maybe Solana too, but Solana basically is the gambling space. And if you are a bank, and I don't want to say the Solana uptime is bad, they have pretty good uptime if you go for a normal software system. But for a finance system, the Solana uptime isn't there yet, with a few hours of downtime each year, which they had in the past. So the only one that's left would be Bitcoin itself, which doesn't have enough transaction throughput to actually do it on its layer 1, and Ethereum. And Ethereum has enough transaction throughput to halfway handle it, since it's proof of stake now. And it has enough adoption by bigger banks. It has enough off-the-shelf tech. And if it will happen, I think that's the reason.
Yeah, it's like it's still. I mean, great analysis for sure. Not a shadow of a doubt with that. But you know, unless it happens, it doesn't happen. You know, it's got to happen in crypto for it to be real. You know, speculation will get you trouble in crypto. It'll get you in big trouble.
Yeah, because if they have some insider information that we don't, then like we can't play that game. Like we just can't. Otherwise, your life will be like my fucking frame rate right now. Just fucking suboptimal.
The insider info might just be that they want to dump in summer. So
Infinite Oneness, $2 super chat says, can you look at the SPX 6900 chart? So here's the thing. When looking at memes,
there is no chart.
Yeah, there is no chart, first of all, right? The thing is, looking at meme coin charts, they're only really predictive like on the way down, I would say. I have looked at multiple aspects of this, and you have to understand meme coins, it's about the narrative, it's the vibe of the group. It's like, how crazy are these people? That's really what it boils down to. How delusional are these people? And that is something that you want to be analyzing. So you need to be in the Telegram groups, you need to be checking the sentiment on Twitter, you need to see, is there a lot of bull posting going on? Is there not? I mean, I was pretty bullish on this when Murad first came out with it. I can see on the chart, it goes like right here. Yeah, here's when he started bull posting about it here when it was like around 5 cents. This is when he gave his speech at in Singapore Bitcoin 24 net. And then it's just done phenomenal. It was like market cap at the time was like, yeah, $40 million. And then it ripped up to like, I think it peaked out, yeah, like 1.44 bill, right? So, I mean, just like a tremendous, Lord have mercy. How many? Oh, like 20 X? What is that? How many X's is that?
Oh, a bit over 30, 35.
Yeah. Yeah. But yeah. Yeah, look, we need Adam for that. Adam, run the numbers. Anyways, it's kind of right now. Okay, I'll tell you this right now. Do not buy Chill Guy. Okay. This is terrible advice. Anthony, do not give advice. Do not buy Chill Guy. Chill Guy is dead. It's not coming back. It was a flash in the pan. The IP and all the scandal from the original artist guy was causing a lot of trouble. No. Please, no. Don't do that. Okay. Right now, honestly, I wouldn't touch memes. Like you have, unless you have like a really, really, really good eye, a good analytical eye. Sorry to hurt your feelings, Anthony. We still love you, buddy. Keep watching. I just saved you some money. But unless you are really good at memes and you have a good understanding of sentiment, good understanding where the market's going, and far more depth of knowledge than the average person, then you could choose a winning meme. Yeah, and because again, another one, this guy's real world assets, AI coins. Again, AI coins, not everything's down, bro. Everything's down. Buy now if you have conviction and it's a data-driven conviction. Other than that, you're just gambling.
If James would be here, he would say, take
nothing's
a max.
Changed.
Yeah, and what he would say after that would be, take 10% of your bag, not more. Use it to gamble on meme coins, on whatever you think has a high chance of pumping and is fun, and let the rest sit, or let the 90 other percent sit in whatever you think is long term a good play.
Yeah, scratch that itch.
There's a new update that just came out through Invest Answers. James put it in the Bitcoin chart or in the Bitcoin chat. Yeah, that's something to take a look at. Yeah, I don't want to be right. I don't want the bull market to be over. But we'll see.
Yeah.
We'll be back next week, guys. Thank you so much for being here. We'll catch you next time.